I'm Bambi Francisco, and I'm speaking with Charles Moldow. He's a general partner at Foundation Capital. Charles, what's wrong with the venture industry, if there is something wrong with the venture industry? Bill Gurley wrote an article, says he believes the VC industry is going to reduce in size in terms of the number of VCs, I think 900, possibly 450. Lots of things going on there,
yep.
and reasons for that reduction in size. What are your thoughts on that?
Well, first, I think it's interesting to note that venture capital has created 21% of our GDP and 9% of the country's employment.
Wow.
Right? So, like, amazing, like, it just amazes me as well. Those are incredible numbers. So,
yeah.
Historically, it's been a pretty big driver of our economy and very important to the country. The question, there are people who say, like, is it broken or what's wrong with it? And there's nothing wrong with the level of innovation inside the country. We're seeing, it's constant innovation around all types of technology. The issue is how much money and where is the money coming from that's being applied to support the industry. And in Bill Gurley's post of about a week ago, I think he correctly pointed out that there historically, in the short history, has just been too much money. And as a result, too many things get funded. Those things are of high quality and of low quality. And the low-quality things tend not to work, and therefore the broad-based returns in the industry come down, and people think something's wrong with the industry. But in fact, of the 900 or so venture capital firms, the majority of returns for limited partners come from maybe 20 firms. And so if you look at the performance of those 20 firms, it might be down some because those 880 firms are investing in competitors. That's making it harder for these companies to succeed.
Right.
But it's not down to the point where it's broken.
Right.
Now, it might be broken for the 880 others, but it's not broken.
And you'd prefer that. You wouldn't...
We'd prefer them just to go away so that we could, not have the 8 competitors every time there's a new startup. But,
quick question about the 21% of GDP. So does that include like a Google?
Absolutely.
Or company? Okay, so companies that are in their
venture-funded
maturity.
businesses, yeah. Cisco.
Where do
Amazon.
you think, so in that article also Bill points out that venture capital really only accounts for, say, 2% of all of the investments across different asset classes. So do you see it going back down? I mean, I would suspect that it would actually be going up. For some reason, it feels like people want to be more innovative and entrepreneurial.
I just think that when you're talking about the entirety of the market cap of the public companies, right, and you add all real estate investment in that pool, and then you say, okay, and how much money then goes to startup companies? The number is so small.
It is small.
And it's appropriately small. I mean, it doesn't need to be any bigger. There's plenty of money, billions of dollars a quarter being invested in startup companies. That's plenty. So
okay.
That's not really an issue,
If there needs to be a change in the VC industry at all, there needs to be any change, and it sounds like you're looking for, you'd be fine if some of the many hundred of VCs actually went away and did something else. What are the changes that you think need to be made in the industry?
Yeah, I think we need to continue to practice it as a craft. So I think when people start to institutionalize the business and try to kind of manufacture it so that you can increase volume or throughput, I think the business tends to start looking more like financial services businesses. And the venture capital business is a craft. It is a kind of hand-built, one-to-one, people-to-people business. And to be practiced well, it's all about relationship, and it's about working closely with entrepreneurs to help them do what they want to do. And when it gets to be more about putting money to work and bringing people in the industry who don't have first-hand experience, then I think it starts to move away from that. So that, to me, is, if there's anything, it would be more bringing it back to the craft that people have practiced for the last 40 years.
Given globalization, the ability to connect so much with people from all around the world, and the fact that technology is pervasive and reasonable, has that changed that craft-like nature?
I think it changes maybe where we put the money to work. But we're seeing great entrepreneurs come out of India, obviously, and China, and Brazil, the United States, and all parts of Europe. So it's only changed where these people originate, but it hasn't changed how they approach building businesses, and it hasn't changed how we approach working with them, I don't think.
Do you see, I think, there's about $3.5 billion being spent quarterly in venture companies, or in companies. Do you see that moving up, staying flat, going down?
I think it's going to move up a bit. It may not reach kind of historic highs of 10 billion in a quarter, but I definitely think.
When was that?
Yeah, back in the bubble.
Oh, okay, that was a long
back
time.
in
I
the long
don't
time
never
ago.
reached that. It's like 25 to 30 billion,
Yeah.
kind of, right?
Yeah, but I think that it feels to me like when I talk to kind of our VC brethren, people are setting a very high bar on the quality of things they invest in, and the investing pace is off a bit. So it feels like as the economy maybe builds a little bit more confidence, we start to see a bit more kind of loosening of purse strings, that it'll definitely go up from here. I don't see it going down from here.
And what about your investments? Are you going to be, you're seeing making more investments over the next 6 months? Or?
Yeah. So we definitely don't set a target for ourselves. We just have, an objective of finding quality projects. And then we look back and say, what's the pace like? And our pace is off a little bit, maybe. We do a very select number of deals a year, maybe 10 to 15 a year, as it is, projects. And so maybe we're down a few off of that pace. But next month we can invest in 5 things. It just is a matter of it's when you find them.
Right.
Yeah.
That's it. And then what about raising a new fund? I know you raised one a year and a half ago, but so that's not of any concern right now.
Yeah, we've got a couple more years. It was a good sized fund. We love what we did with our limited partners there. $750 million, and we've got at least a couple years ahead of us.
And last question, what does the venture industry look like in 5 years?
I think it looks the exact same. Maybe I wish it didn't, but I think in reality it just takes decades for this to reinvent itself, if there is a reinvention going on with respect to the number of firms.
I think you're right.
Yeah.
Charles, thank you.
Sure.
I've been speaking with Charles Moldo. He is a general partner at Foundation Capital. I'm Bambi Francisco.